When things change for the worst, fast, there's usually an outsized opportunity to make things better. So, as getting insurance for your car and home in California got more and more insanely difficult to do at a reasonable price, I figured there's got to be a small window for substantial change. Insurance companies weren't making money for years, and California's Department of Insurance was slowing down rate hikes, and so many insurance companies were leaving the state, it was hard for anybody to get coverage. So I thought I could start an independent insurance agency and educate Californians on the ins and outs of insurance so that they can get better use and value out of their policies because they are inevitably going to just keep going up in price. And because we're independent, we can shop multiple carriers at once and get Californians a great price. Turns out I actually couldn't do that. I wasn't allowed to take the shot at trying to solve this problem that thousands and thousands of Californians have. And here's how that happened. Part 1, Getting Blindsided. There's a ton of things you have to do to start an independent agency. You gotta pass an insurance test, you gotta get an insurance license with the state, sign up for an LLC, get the agency approved with the state, get insurance for your insurance business, and start marketing and building out all the agency tech infrastructure. I did all that and got held up in a way that I couldn't believe I didn't see coming because it was such an obvious roadblock considering the strategy I was choosing to take. If insurance companies weren't able to write profitable policies because the Department of Insurance slowing down the rate approval process, why would insurers want new agencies signing more California policies for them? So while I was laser focused on a strategy to provide value for consumers, completely forgot the other side of the equation. Had no one that wanted to buy Californian home and auto policies. We talked to 8 different insurance networks and insurance carriers over 2 months, and all of them said the same thing. Personal lines auto is just not going to work. They, the insurance carriers, are not doing any new appointments for anybody, let alone someone that's completely brand new and hasn't signed an insurance policy before. It was already risky enough to have California policies in the first place, and now another variable of not knowing the quality of someone's policies was a deal dead in the water. Part 2, The Ways Out. You're guaranteed to run the roadblocks in business. Things just go wrong. It's a part of what happens. But also, it's kind of fun to figure out how to get out of them. Just because insurance companies in California weren't allowing new agents or agencies to sign policies for them doesn't mean we're out of options. And after talking to those 8 agency networks and insurance carriers, who were all very helpful in brainstorming different ideas, we came up with a handful of ways to get around it. And definitely, I gotta say, as far as industries go, insurance professionals really seem to enjoy helping out other insurance professionals. I had several half-hour, hour-long conversations with people who I just talked to for the first time that day. It really seems like everyone's in the same battle here. At some point, inflation risks are just up, and everyone's doing whatever they can to keep the market solvent while pissing off as few people as possible. And after those conversations, here were the routes we could take. 1, be a captive agent instead of an independent agent. Captive agents work for the big insurance companies like Geico, State Farm, or Allstate. They typically sign agents to work with them exclusively, and those agents cannot sign policies for other insurance companies. This dynamic is pretty specific to personal home and auto insurance. There's just so much market concentration in the top 5 or so insurance companies that they can really just demand that from their agents. I didn't realize this was how the personal auto insurance market worked before hatching this plan to sell personal lines auto. The biggest players with the biggest economies of scale work almost exclusively with captive agents, and independent agents have a small pool of insurance companies that work with independents and brokers to choose from. This means structurally as an industry, any individual agent or agency could never actually find you the cheapest price because they would never have access to quote all the most important, largest carriers. And since the mission statement of the business is to A, help consumers shop for better prices, and B, understand and effectively use their policies, being a captive agent eliminates number 1 immediately. Also, from a diversity standpoint, to stay captive to one insurance carrier seems insane. I can imagine being a new State Farm agent, signing that contract, and then weeks later they announce that they're not going to sign any new home insurance policies in California. The entire business is dead on arrival again. So being a captive agent is not going to fly. Plan 2, buy an agency with existing appointments. The insurance industry is centuries old, and there are small independent insurance agencies that have been in business for decades where the business is about to retire and the kids don't want to carry on the business. This is happening across a lot of blue collar trades, but it's also happening a lot in insurance. Private equity to some degree is consolidating a lot of these smaller businesses, probably for a result that will be worse for consumers in a decade or so. But the fact of the matter is that they're there, and it's a workaround to the carrier stopping new appointments problem. The agency could get an SBA loan, buy another agency with an existing book and existing appointments, and build out the new business inside the skin of an already existing business. Or if I didn't want to get an SBA loan, I could just work out an arrangement with an existing independent agency and sign policies under their appointments. This happens a lot in the industry. It's called sub appointments. It's a great idea, but it's got two very big, wide, gaping holes for me. A, I don't know any retiring insurance agents because I'm completely new to the insurance industry. And B, I don't have the 3 to 6 months it's going to take to get an SBA loan, find an agency, pitch the owner, get the acquisition done, and sign the deal. Not to mention, I think most banks aren't going to be very interested in the idea of loaning out $1 million+ to an insurance agency run by someone who's never done insurance. Possibly a way out of the problem, but just not an ideal timeline and questionable if it's not just going to run into another roadblock. Idea 3, completely change the plan. There's one idea that kept coming up in my conversations. Between all 8 of the people I talked to, they all said this one exact same thing. It's so hard to start an auto insurance agency right now. Why don't you just go do commercial lines instead? It's wide open and carriers want to sign that business. And each time with my giant stubborn ego, I would say, no, thank you. I just need one good insurance carrier to let me sign policies and I can get the job done. It wasn't until someone really laid out what would happen in personal lines that I truly understood how dire the personal auto insurance situation was from the independent agency side in California. He said you will get maybe one appointment and then you will go and find leads and you will go and talk to that person, quote them, and then you will get destroyed on pricing because the appointment you get will not be competitive against 90% of the other car insurance carriers right now. This is my first real lesson in the insurance sales industry, and I guess it's kind of true of all industries. You do what the insurance carrier tells you to do, even if they're telling you it indirectly. 3, the difference between personal lines and commercial lines. So after working on this personal auto insurance business plan and model for like 9 months, I had to axe it before it was even born. I was not excited about the idea of working with businesses, to be honest. I'm a business owner. I've talked with lots of different business owners. We're often very stressed and not very fun to deal with. It took a long time to come up with a new strategy, a new niche inside of commercial lines. And as I started to dive deeper into the commercial side of the insurance business, I started to be able to see a way I could do the business in a newish and interesting-ish way. Personal lines and commercial lines are actually incredibly different, even though they're both insurance. First of all, everyone I spoke to was completely correct. Commercial lines is wide open, and I was able to get direct appointments or sub appointments very easily, even though I've signed 0 insurance business before. And the path to getting direct appointments from the sub appointments were surprisingly fair and favorable. In personal lines, there's one product with 5 coverages that everyone sells. In commercial lines, there's dozens of industry specific coverages with hundreds of different types of businesses. It's incredibly wide and very easy to get lost in your marketing if you're not focused. The Department of Insurance is a largely consumer facing organization. They work for the people of California, and the insurance commissioner is elected by the people. They don't seem as interested in policing rate hikes for businesses, and that means more insurance companies are happy to do commercial business in California, except for commercial auto, but that's another video. But that also means businesses are feeling much more pricing pressure from their insurance premiums, and there's competition in the state to actually shop it. Commercial insurance is actually a healthier market than personal lines in California. The ultimate irony is that the ideal situation where I wanted to help everyday people quote and compare under one roof all the possible insurance companies was actually impossible for personal lines the entire time, but it is possible for commercial lines, the thing I was resisting so much. And because commercial insurance is seen as so niche, it's actually underserved and, dare I say, undersaturated from a marketing perspective. And I was able to find a new mission statement in commercial insurance, one that I actually might believe in more and have a more personal connection to. Small business entrepreneurship is something I believe everyone should do, and having the right insurance protects someone's dream business. So that's what we're going to do now. We're going to protect small business dreams. It took a long time to get here, and everyone's stories have their own random twists and turns, just like this one. But getting turned down by every single auto insurance company in California for personal lines, maybe that'll be one of the best things to have happened. And who knows, we can always just get back to personal auto insurance in the future, right?